Hello everyone, Jesse Webb, TradersPro. Market conditions have ticked down to bearish in a bull market. We are actually starting to see now this upper range. You can see that starting to flatten out, roll a little bit. So this last month or so of retracement on SP 500 is now starting to show up on the overall long-term trend, which is significant because it's a very slow moving indicator, and we're at the upper end of that indicator. So we're certainly pausing this trend, which is not entirely unexpected. And on the short term, we're still sitting right at support. We'll look at that chart here in just a minute, but it's losing momentum here on SP 500. We've also, what's making this bearish in the bull market is now that our momentum has moved back down into this bearish trend. This is a shorter term bearish trend based on a daily chart. So we've now moved back into that range. Again, we're in a strong uptrend, but this is now we have to be aware of these levels because they can continue to accelerate from here. They could bounce from here as well because we are in a bull market. So we'll look at some charts here in just a minute. Momentum, though, is now dipped back down under that halfway point. So now it's going to be resistance if we have any rallies, and working its way back down, potentially towards an extreme. So we may want to be watching closely now for an extreme the other direction, for an opportunity for a bounce higher. Breadth is also weakening, but stable right here, at least in this last day. And then sentiment is still in that upper range as well, which is also normal. Okay, the buy-sell ratio is decidedly bearish right here, the halfway or the line drawn right here, and we look at that and say the red in the green, red above green. We've got more stocks in the database that are trending lower. That is also a market breadth indicator. And then sentiment, as we look at, working its way back down towards this lower range. If we take a look at SPY and look to see where this current trend is working. So we've now ticked back into the bearish trend. Short-term trend is down. It has been down for a few days, but now we're in this sell range or downtrend, and we're sitting right at an area. It's sitting right at this support range. It kind of broke through that, but it's, again, these are zones, these are ranges. So we'll see if we pull all the way back to this level, this 236 Fibonacci support area, which is also a major support area on the chart itself. When you're looking at uptrends, a common retracement zone is typically no deeper than this 236. So we could pull all the way back down to these levels, and that is if we break through this level. Goodness, sorry about that. And we have a support range at 433 on SPY. That if we continue more acceleration to the downside, that's going to be the area that we're focused on, and it could definitely get there with some additional acceleration. And it could look like something like this. If we are in a good solid uptrend, we could retrace, pull back, and these are areas that we just don't necessarily want to be a part of because it could slide back down to this other side. Now, the market as a whole, that's a little slower process. Individual stocks, we definitely don't want to be in something that has moved back into this downtrend zone because they also can accelerate. We're not in a wait and see game right here. We are making a reaction off of the current trend, and then we'll watch to see if that trend continues to the downside. If it finds support and stays, moves from red back to yellow and then back to green, then we're going to have a little bit more of a confirmed upside. So as of right now, you can see this is the first day, the first bar, potentially like that, where we maybe pause and hold. I would expect some support inside of this zone all the way down to here. You can see it's right in this range, and then we'll see what happens. But as things are shifting more and more bearish, we have to be aware of that. If you go back to the market trend tab and you're looking at kind of what should I be focusing on, bearish in a bull market, this means that traders and investors should consider trading with a bearish bias, raising stop levels on winners, selling losers. Remember that we don't want to sell our winners and buy more of our losers or adjust our stops on our losers. We want to sell the losers and keep the winners, and then adjust our risk on our winners. The losers are not working. They're just not working. So why keep them? Okay, if they're in sell signals or downtrends, or especially if it's lower than your existing buy point at this point, there's no reason to wait it out and see what happens. It could continue to drop. It could go higher, but now you're hoping that your risk tolerance either changes or the stock changes. One of those two is going to give. Your risk tolerance is not going to change, but the stock certainly could add fuel to the fire by hurting your overall risk tolerance. So that's, again, it's just a simple strategy. You've got to decide if you want to follow a strategy or not, and hoping that things will turn and move higher. Now, you're never going to get the exact bottom, never going to get the exact top. The overall goal of an investment portfolio is long-term growth over time and making decisions consistently to add into and support the overall thesis of what you want to be able to happen in trading stocks. Let's jump over to the indices, because we've seen the Dow, that number of Dow drop from 11 or 12 back down to 5. So now we're getting a significant number of Dow stocks that have moved back into the hold range. That bumped the buy-sell ratio significantly down below 1, but you can see what happens here. We've got 5 buys and 7 sells, but we've got a bunch stuck in the middle. So that also is confirming that this is a hold, non-trending market that is weakening, at least based on the Dow. We can look at some of these other indices as well, where we have 16 and 45 and 54 in the S&P 100, and then the S&P 500, where we're looking at, where is it? Right here, 200 to 60, and then some stuck right here in the middle. So quite a few stuck in this hold range. That could be that transition into downtrends. So we'll keep a close eye on those. We do have, there's always going to be decent looking stock patterns in here, whether or not as the market is weakening and we get rotation into certain stocks. I don't think that I would not own stocks as markets are weakening. There's always going to be some fantastic stocks. So let's take a look at those. You just have to be aware of position size. It's just not a great time to aggressively be adding in to positions when the market as a whole is starting to weaken, because that's the biggest indicator we're focusing on, is the market direction as a whole. We want to participate in the market direction as a whole, or even in the shorter term, we want to participate in the market direction as this shorter term. So if we're looking at the buy-sell ratio, and we've got stocks, the majority of stocks that are starting to weaken, at least in this case, now you've got 3,000 stocks to the sell side and another 800 to the buy side. That is not strong at this point. We are approaching a little bit more of the extreme though. And again, up this upper range, once we start to reach these levels, we get some support levels, we could start to see a bounce right here, but we could also see some continued acceleration. And any rally that we get, typically this is a 3-part counter trend move or trending move, where we get a move lower like this, and then something like that, and something like that, and then they start to move back together like that, and then ultimately they come back. You can see that formation here, that formation here. So we're relatively early in this formation in terms of buy-sell ratio and downtrend. I'd keep an eye on that. Let's jump back through this watch list. MSNO. Now, I've got some fib levels on here, which I haven't had in the past. TradersPro has a Fibonacci snap tool, which will automatically snap to the high and the low on your chart. So when you're looking at a time frame and you've got, for example, this 1-year time frame, then it's going to find automatically find it and snap to the swing low and the swing high. Man, I'm struggling this morning. And that is going to have this uptrend range connecting to it. That gives us this support area to keep an eye on, because once stocks move higher, they typically won't retrace back through that. So as you're getting some volatility, you can say, okay, where is my initial stop loss? I usually suggest setting at the low point, but you could also use some of these levels as it's marching higher. And if that starts to change, and that automatically will move the other direction. For example, if I were just to grab this range right here, and pull in from here to here, you can see it's automatically going to snap the other direction. So if I've got a long-term downtrend, I'm going to see it on that chart. If I've got an uptrend, then I'm going to see it on the chart as well. So we can use the overall trend indication of the green uptrend, the actual momentum locations, but then we can also be paying attention to these levels as we're looking through individual charts. So let's go to that next chart, and you can see some of these things as well. This is snap to the swing high. Ideally, what we want is this. We want this snap to the swing high over here on these uptrends. So sometimes these will create a little bit, they're either earlier in the trend, but this retracement was so deep that this momentum could be a counter trend as well. Nonetheless, it is moving higher. It's just got a little bit more work to do than some of these other stocks, like some of these MHO, these momentum. These are high-flying momentum stocks. If I were to again go back and move this price point back to, let's say back to here, and I'm seeing this chart and I'm looking at it day by day. Okay, I'm now looking at, you can see it snapping to the high point, and then this next big move, now it's snapped to the next point as well. Now I've got a little bit more of a tight range in between my high point here and my 236 support area. That's going to move along with the stock. So as we're moving higher and higher and higher, which is what we want, at some point it's going to get so high that we get a retracement. Well, we don't know when that's going to happen or how high that's going to happen. So we don't want to jump the gun on anticipating more downside really until we've gone from here all the way back down to this level, which in this case is not that far, but you can even see that level, that 236, 38, 250, 618, those are really, really common and powerful support locations. And so we can continue to stay confidently in an upward trending stock, knowing in this case it's green, knowing in this case we're well above this level, knowing in this case our swing high snap point is at the most recent high, and we can continue to trust that trend. Again, until it stops working. We're not going to add our opinion to this. We're simply going to add what is working and what is not working. Okay, so MHO, GASS, let's take a look here and see. Interesting. Here's an interesting chart pattern as well, where it has this long 1-year chart. I typically like the 6-month chart though, so we'll actually go into that. Now you can see my swing low, swing high. It's now retraced to this low point, but it's still in the buy zone. We have a shorter term downtrend, but this is an area where you're seeing some bounce, some reaction, and it may continue that overall uptrend. Ideally still in that buy zone without ticking back. So it was a yellow hold yesterday, but it's now moved back. That's also one of the ways to use the tool. Here's ACLX. This may be one I'm not interested in because you can see how deep that retracement is, and it's got some resistance areas to be dealing with on the way back up, and I would prefer to have something that has a whole lot less upside resistance to be able to continue that upside trend. Here's an example, PAM. This had a pretty odd move yesterday or 2 days ago where it retraced, sold off all the way back down, and then rallied back up again. So some volatility here, but a very, very interesting, very powerful bottoming tail bar for whatever reason. There's obviously big heavy hitters that are playing this game and maneuvering around some of these price activities, but somebody was interested in that price point sell-off to be able to buy into that stock. Let's look at a couple others and see ORIRC. This had some volatility here yesterday, but a really strong 180 reversal where it an engulfing pattern where it traded lower, moved higher, also bouncing off of that support range now, and we'll see if we get some continued upside on that stock. That'll do it for today's update. Everyone have a fantastic day.